Two. That's it. Just two.
Two! 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 No, no, no! Two! Two! Woo!
All right, 2 trades. That's all I took today, but fortunately, they were 2 really good trades, and we're going to talk about those in just a second. So let me do the official welcome to Stock Market Mutterings trade review and recap for October 18th. As always, if you guys need help with your personal trading, take a moment, visit thelinkenlist.com, click on the trade room tab, and you can start trading with us right away. As you can see, it was another green day. That now makes 13 of the 14 this month. Which means only 1 losing day, guys. 1 losing day in this market. In this market. If that's the kind of consistency you're looking for, you know where I'm at. Just do it. So before I get into talking about that, I want to go back and I want to just hit on a few things in these last mutterings, the game plan and the theme that we've been talking about. Because I know some of you are watching these every day. You already know what I've been saying, but some of you are probably spot watching these, watching a few here and a few there, and some of you might be seeing this for the first time. Really, since this market has been correcting, the plan has been to short into strength and to buy into weakness. I mean severe weakness like panic flushes and stuff like that, just for trades. And that formula has been working real well this month. And really more of it has been shorting into the strength than it has been to buying into the weakness, because we just really haven't got a whole lot of panic flush. It's just been a really trendy downward market. Now, outside of that one bullish day, I can't even remember what it was, we're already selling off here again. This kind of brings me back to some of the points. If you go way back in my videos, just months ago, years ago, I was always talking about how important it is for traders to learn how to short sell. I know the natural tendency is to want to buy stocks, but there's so much money to be made into shorting, and it's an unbelievable, powerful thing to have in your toolkit just to learn it, because in times like these, that's where the real money is, and you need to know it. I mean, if you want to survive long term, you need to be able to buy and short all within the same day. But anyway, if that's what you need, you know where I'm at. So let's talk about that, because what we didn't get today was we really didn't get any sort of strength to begin with. I mean, we kind of started off weak. We made a couple of, really lame attempts at rallies, and then that was it. Now, something that I have changed a little bit about the way I do things, I've been talking about, I hate shorting down in the hole. I don't like doing that, but I've been doing a little bit more pivot shorting in mid chart, which I'll talk about here. So let's go back through the first trade as you saw there, which was my good buddy. That's 2 days in a row for King Baba. From now on, call me King Baba. I'm King Baba. No, don't call me that. So here's what we were looking at. Just when I looked at this morning, the first thing I was thinking was, man, we're not going to rally. I mean, we had every opportunity to build on that rally that we talked about. I can't remember what day it was. Maybe it was Monday, Tuesday. I don't remember. 500 pointer. And we sold off yesterday. It was like, well, it was kind of weak, but it was okay. And then you gapping down and you start selling. It's like, look, the market doesn't want to rally. We're probably going to end up going back to the 200 moving average again. This is the same types of behavior that we went through in February. Pull up your charts in February. You'll see exactly what I'm talking about. Just look at the market. It's going through the same kind of behavior. And this is what's to be expected when volatility returns. So anyway, I'm not chasing down in the hole, but if you look at this, let me just open the chart up a bit here for you guys. Show you what I'm looking at. I was just ready to go, look. Once this thing starts bouncing, I'm like, I'm just going to short this bounce. And then if Baba wants to do something here, and this market wants to get going, then squeeze me. Almost like, I double dare you. I'm really not double. I'm not double daring the market. I'm just kind of saying, look, do it then. Because I've been seeing you for days, weeks. Baba before, while the market was strong, Baba was going down. So kind of remember that. The common sense is if a stock was going down in a bull market, if a bear market comes by or a short-term correction in a market, then what the hell is that thing going to stand on, right? It's done. And Baba has just been a mess, an absolute mess. And I was just looking for it, and that's really all it was. It came less technical analysis, more common sense. You got to bounce up here. I was like, I started with the starter position. I'm like, if it comes back up to the highs, let me just minimize this here. I'll show you what I was looking at. I said, if it comes back up to this highs, which is 147, those were the pre-market highs right here. I'll start with a half position here where my entry was. I'll add if it comes up into here. And if it still continues to squeeze, then I'll cut it. So I don't really have a whole lot in there. A lot of other stocks are going down. Market's showing signs of weakness, failed breakouts, all that good stuff. And this thing rolls over. And you know what? I took the profit. Obviously, I could have held it, but it's hindsight's 2020, right? I mean, this thing ends up going several dollars down. But by this time, rather than just, you're going to run into situations like this where you kind of botch up a trade and leave money on the table. It's real easy for us to go back and criticize ourselves for something that, we didn't really do, right? So rather than just revenge trade this and we start looking around, I'm looking for anything that has strength to it. And then we stumble across this BA, which happened to be green at the time. And if you noticed a couple of, I think it was maybe slightly before that, Tesla had a very similar pattern. If you look here, this is the intraday up top. You got this V-shaped rally, and then the thing comes up to the high a day, gets rejected. Now, if you're learning charts or you guys just kind of stumbling for information here, these wicks right here are really good signs. So look at every time this thing starts to press above the highs, it gets sold off and finishes, the bar finishes with a wick. And you got one right here and one right here. And eventually it just taps out. It can't make it over that 270 and then it sells off. So this brings me back to BA because BA was doing the same thing. And BA comes around here, kind of has that same V-shaped rally, goes back up to high, and it actually makes a ramp up through the highs. And then this gets rejected. Now, one of the things I can't show you here right now, and I mentioned this in a couple of other videos, there's an element in the market which is hard for just why technical analysis books don't work in every case, and why hindsight talking about stuff like this sometimes doesn't do people justice, is because you can't see the speed. Speed is always an important element. I want you to focus on charts when you're looking at it. Look at the speed. When you're talking about something that goes up, look how fast it goes up. Look how fast it goes down, because speed is a kind of like a definition for panic or emotion or like a loss of control. I need a better word, but I'm going with it anyway. What we saw here was this was sharp. I mean, a sharp pullback. It shoots up to 368.80, and I mean almost within the snap. I'm serious, within the snap of your finger, play it back. This thing gave up $1. So when you're looking at that, again, we keep going about this, beating the table about common sense. When you go back and you start looking at this stuff, and you're like, it's rejected so fast. What does that tell you? I mean, it's right. That's all you need to know is right there. It's like, if it's going to break out, it would have had some support to continually have such abrupt reversals. And that's what we're really seeing. We're seeing very minimal abrupt reversals to the upside. Very minimal, meaning they're not sustainable. They'll have 1, 2 green bars, or they'll fight like hell just trying to get a couple of green bars together. And then all of a sudden one red bar will come by and smoke them out. So within a few minutes, this happens. As soon as it starts to turn red, we're like, I'm shorting this thing. We're in it. We pick up some right here on the first downwing. We take half, and I held the other half all the way down here to damn near 361. So it was only like a $5 trade, a big one, kind of like Netflix was there, right? So really, really huge. And obviously, yes, I could have held it, but I'm trailing down and I eventually get stopped out because who knows, the market could bounce. I'm not going to sit here and complain about the fact that I could have got a little bit more money, but the market just kept doing that. And when you're looking back at it, I mean, you just pick some spots here on your SPY charts, your market charts. That's what you're seeing is stuff like this. I want to highlight this little area up here. I got to draw it with this software, but just like this red bar right here, that's showing you that this market had put together. These are 5-minute bars, by the way. You have half an hour to 40 minutes worth of a rally. A nice little grinder rally, nothing huge, 40 minutes. And then one 5-minute candle takes almost the entire thing out. So you're going up for 40 minutes, and then one bar is practically cleaning that out. That's the market that you're in right now. So when you're looking at these trades, that's what longs are thinking, who are buying these dips and buying these, is that, hey, it doesn't take much for these things to turn around. They get wiped out so quickly. That's going to scare people away from buying dips, because that's too much for them to take right now for most people. And that's just the way it is. And that's what you got to be thinking of. Therefore, I feel it's better right now to short until you can start seeing some of this stuff. A good example of this, if you guys want to look for something tomorrow, you got to be taking a look at this NVIDIA for a short. I mean, gosh, there might not be, well, there is worse. But this thing has had one hell of a reversal of fortunes. I mean, it was just a few weeks ago, this thing was, beginning of the month, it was pouncing on 290. People were talking 300. And this thing's just made a nasty nosedive, and it's not even it's one day it's tried to recover, and it can't get above its 200 moving average. And I think one of the things, we keep going back to common sense. That's why I keep preaching this, because this is what I want you to know if you want to survive. It's not all about lines and charts and drawings and stuff. Goldman's upgraded this thing. They came up and put it on their conviction list, and it gaps up $3. And within 20, 30 minutes of the market open, it's red. I mean, Goldman's can't even save NVIDIA. Not even Goldman's right now. So definitely the Momo's changed. I mean, when you compare it to something like Apple, I mean, Apple at least has held up a good chunk of what it has gained. It's been relatively solid. But boy, I'm just throwing that one out there. If you want to trade, you're looking for it. Look for some bounces on NVIDIA and short those bounces. Like I said, you've had one day out of the last 2 weeks that's even remotely decent. Now, you always may get that. You never know. You're down here around the 200 moving average on the markets. This has always been an area that's been of interest going all the way back to February of the markets. Fought that off really well. So you're going to get these bounces back and forth. You just have to kind of pick your shots. One thing you don't want to do is, again, chase into that weakness like that after it's already sold off. Wait for these bounces. If the bounces are weak, short them if you don't open up with strength. If you open up with strength, give it a little bit of time, maybe 15, 20 minutes when the day starts before you start throwing shorts, because it could turn out to be a rally day. So you don't want to just start, I see a green bar first thing in the morning, I'm in. Give it a little time for that data. So really the one I'd look at here, dudettes, NVIDIA. It's a short until this thing can otherwise work its way back up above the 200 moving average. Until then, just keep doing it until it stops working and you get squeezed. Then maybe look at it long. So I'm going to leave it there. Again, a good day. What am I going to say? We had a good plan. It worked out. Being a lot more patient with these trades. Almost every day's green. We're not even, we're just barely halfway through the month here. We still got a couple more weeks to go. So who knows? Who knows when this is going to stop? But just go back and look at your charts in February. It's tell you a lot of things about how the market works through situations like that. And we're in the same type of environment. So we'll see. Like I said, a good day. Pretty proud of the way we traded. Could have made it a little. There was a couple of dip buy opportunities. I think late in the day you had a couple of nice pops on Apple and a couple of these other ones, but I wasn't ready. Wasn't interested to do that. So anyway, I want to thank you for watching this video. Take care. I'll talk to everyone tomorrow.